As a responsible person with growing concerns for your privacy and personal liberty, you want to know where we're headed and what you can do about it. We ask the experts what you need to do to take prudent and responsible action to safeguard your family's wealth and well-being, and what basic first steps will help you to be aware and prepared. ReluctantPreppers.com.
Welcome back, Reluctant Preppers. We have a returning guest today. Brother John F., founder of BrotherJohnF.com, Silver for the People, is here with us again here on Reluctant Preppers. John from Brother John F., thank you for joining us on Reluctant Preppers.
Thanks. It's great to be back on.
We look to you and your mantra of Silver for the People to give us the common man's view of precious metals and how it's being affected in the markets and how it's affecting the lives of ordinary people. So if you could kick us off with, here at the beginning of 2017, your outlook for precious metals for this year. Nobody's got a crystal ball, but what do you think are the main driving factors and megatrends that are present and clearly observable that you think will affect precious metals this year?
Sure. Right now, we're kind of following a seasonal trend that we've seen for a number of years now, where when the new year comes in, we see strength starting to come into precious metals. They're not really that strong. I think silver is around $1,750 right now, which is well off the bottom. But, on an inflation-adjusted basis, you could probably draw a flat line all the way back to 2003 or so when the bull market took off. And you're talking about rock bottom prices. So what is the prospect going forward? For the stackers, really, if you believe in the fundamentals long term, then it's just continue to stack. I think we'll probably make a challenge of those old recent highs around $22 on silver. Gold is still kind of backing and filling. There's a long ways to go, of course, back to that old high of 1900. But there's some strength showing in gold as well. Again, I think that gold is a bargain, but silver is a tremendous bargain. Now, everything is going to hinge on how they deal with the debt issue, how they deal with the trade issue. And we're starting to see now what Trump's policies may be. We're not seeing any concrete things yet. We're starting to see trial balloons being floated. And we know that Trump in the past, during 2016 campaign, kind of hinted at that he thought it would be he's at least positive towards a gold standard. We're moving away from the current standard, which is a petrodollar standard. We're kind of in the air right now. The dollar has been very strong for the last year. It's starting to weaken now. It was strong due to the weakness in the Chinese yuan, although that's not in the dollar basket, but it's still a very important player. And weakness out of Japan. Japan seems to be pretty much a puppet or vassal of the U.S. And there's, of course, the tension between whether Japan will lean towards Chinese influence or continue to be this sort of vassal for the United States. One story I covered recently on the member site was the decision by the pension fund of Japan to actually begin investing in U.S. infrastructure, if you can believe that, taking the retirement savings of Japanese citizens and using it to invest in, well, we'll see, probably if the past holds any precedent, boondoggle projects. But so it all hinges on how they decide to go forward. A big question is going to be, are we going to have another reflation, or are the elites going to collapse everything on Trump's watch? That's the big question.
You mentioned Japan indicating a potential investment in U.S. infrastructure, that's been one of the questions that others have asked is Trump's, in fact, that was a big issue that came out this week from Washington, is even the Republicans, Trump's own party, coming out against, saying we're not going to fund any big new spending for infrastructure plans because unless we know where this money's going to come from, like for example, building the wall along the Mexican border, where's the money really going to come from up front for that? So ironically, it sounds like you think that Japan might step up looking for the ability to buy some of that debt and to fund some U.S. infrastructure improvements?
Well, that seems to be the way it's leaning. We know that Trump, when he was campaigning, he was saying things like, we're going to build a wall and we're going to make Mexico pay for it. The Chinese yuan started to weaken significantly when this rhetoric was coming out about China. It's hanging over the heads of everybody whether or not the trade policies, whether they're going to be selective, punitive trade policies towards particular countries. So we're seeing a kind of jockeying. I really don't know how far that's going to go. I mean, if you look at Japan, the entire retirement system there is, I think we're talking about $1.2 trillion. They're only talking about a small percentage of that. So, but what is this infrastructure they're going to build? Who knows? I mean, what kind of infrastructure would actually aid the U.S.? It's my contention that if they really wanted to build infrastructure, which I don't believe it's the government's place to have these projects. I mean, they could be a good thing if you had honest people in government, but we have a government run by a bunch of criminals, pretty much. So you could expect them to reward their buddies with contracts and the bids be rigged and boondoggles, et cetera. But I would propose if you're going to build any infrastructure in the U.S., probably you'd want to drop 10 gig fiber optics to every home and business in the country. That would probably do more for the infrastructure of this country going forward, enabling things like people to be able to work from home and all kinds of, that would really change the service economy. I don't think boondoggle rail projects between dying cities is going to have any serious long-term impact. There's got to be a lot more serious thinking if there's any money in infrastructure that's going to make an actual change in the economy going forward.
Speaking of China and the relationship and trade wars with the U.S., Trump. Well, let's back it up. We've seen, and Andy Hoffman has talked about, and others have talked about for almost a year now, this wall of supply, oversupply coming out of China. There have been various statistics quoted on how in a few years, 2-3 years, China has produced more cement, more steel, more solar panels than the entire world has done in 10 years prior to that kind of thing. Just ever seen in the history of the world levels of supply and capacity being developed in China. And you've spoken with some admiration for the industrial approach and the advanced technology and the strategic foresight and building out of capacity and efficiency and so on from that China has exhibited. When that wall of oversupply exceeds their local domestic capacity to absorb that, and that comes crashing against other shores, it tends to drive down prices to below break even for and drive out other companies out of business and basically buy market share for them, but also tends to be this unstoppable force that is just making them dominate industry after industry. And in the face of that, Trump has announced intentions to, for example, get us out of TPP and the Trans-Pacific Partnership and erect other barriers or tariffs. So it seems to be a case of the unstoppable force meeting an immovable object. So what do you see lying ahead in this battle of the walls between China's wall of supply crashing into Trump's wall of tariffs?
It's going to be very interesting. China is trying to go through the transition where they rely more on domestic market demand for their supply. And, with this type of oversupply, that's not going to be enough. They're going to have to rely on demand, I would say, probably from the rest of Asia. You've got over 1 billion people in India. You've got a whole lot of people in Africa and the rest of Southeast Asia. The big question is going to be, how are you going to create some type of system where these people can buy your goods? What type of currency is going to be used? And that, again, that's really up in the air. We're still in a situation now where the U.S. dominates the commodity markets in the sense that they're all traded in U.S. dollars. And so, a lot of people talk about the petrodollar and how the system is rigged so that if you want to buy oil, you have to buy dollars first. And that's the essence of that system. But it's not just oil. It's actually a tremendous number of commodities are traded worldwide, denominated in U.S. dollars and pretty much in U.S. markets. So you got this very strange situation of China producing a huge amount of things like rare earths and all kinds of commodities, and yet those things being priced in U.S. dollars. Now, China has been a net importer of things like gold and all kinds of stuff. They're piling up a tremendous amount stockpile. I think they're getting ready for the transition to the next currency, and that's the big what if. Now, I think they're basically making a strategic bet that they're willing to take whatever losses. I think they've probably already written off whatever losses they have in U.S. treasuries. They've been reducing that significantly. But I think they're probably also willing to take losses in their infrastructure and their overbuilding of everything else. And from their perspective, they're probably thinking, well, we don't know when the next massive world financial crisis is going to come, but we want to position ourselves so that when it does come, we can actually start over quickly in the new system, which is really just going to be a changeover in money, whether that's going to be SDR basket, whether China's going to try to make a play for a world reserve currency or a member of a group of world reserve currencies. We just don't know what's going to be next, but something's going to be next. And so now this tension with tariffs, it's very difficult to assess. The traditional analysis of tariffs, and most economists agree that tariffs are a bad thing. And, if you think about it just rationally, if you have a country that wants to sell you a product below its cost of production, that's like somebody walking up and leaving money on your doorstep. What are you going to do? Call the police? It's ridiculous. It's a gift. But what happens is if you have a predatory situation and it's used to drive basically dumping, which, is an attempt to drive the competition out of business by pricing a product or service below the cost of production. And once you've driven the competition out of business, then you resume normal prices or even higher prices to make up the losses that you took earlier.
Yeah, monopolistic robber baron type stuff. Yep.
Yeah, Walmart is the one that's traditionally cited. I really don't know how much truth there is to that. There is some truth to that. But generally, Walmart, we haven't seen the gouging come back in with Walmart. They're kind of like China. They come in with these super low prices and they just stay there with these super low prices. Everybody else goes out of business.
Well, can we grab that moment, because that's what people have talked about, like the Walmart effect of being a town killer. You put a box right next to a town, and in that box you put a cheaper grocery, a cheaper hardware, a cheaper clothing store, a cheaper optical department, a cheaper clinic, a cheaper everything, and all of those corresponding businesses in the neighboring town get driven out of business because they cannot compete with the economies of scale of Walmart. And then the town crumbles, the people lose their jobs, they lose their economy there, but Walmart's still there, and there's still low-paying jobs available, but there's nobody left to buy the stuff. So that's on a micro scale. I'm just in a nutshell what people have complained about. One of the things they've complained about Walmart. But if you look at China as the infinite larger Walmart, basically putting driving all these domestic businesses out of business, these industries out of business globally, then how does that play out? How is there anybody left who has the income and, like you're saying, the ability to be a source of demand after that, after you've driven them into poverty?
Yeah, that's the big question. I mean, traditional economic theory about economic dumping states that once you've achieved the goal of driving the competition out of business, you raise your prices higher than they would have been if the competition were still in business to make up that money. No business is in the business of going out of business. So, you have to make a profit or you go out of business. So it doesn't make sense to continually sell things below the cost of production. You just drive yourself out of business. So it's a similar dilemma. And, the question is, like I said before, what is China's strategy in doing this? And I think the analogy would be, if you would think about Walmart, it would be, well, if they were foreseeing some massive shakeup where everything changes in the country, the currency changes, people change, everything changes. It's just this huge unknown. And the strategy is to just get as many of these places in the system, get as many stores in place as you can before some massive collapse happens or something like that. I think that's China's strategy. China just wants to be positioned for whatever the next system is. And it doesn't make sense for China to continually sell below the cost of production. I honestly don't think that that's what's been happening, because there's no way that you can accumulate massive surpluses of Forex the way China has by running continual losses. So I think that, we're also not taking into account the very, very low energy costs, the very, very low labor costs. I think there's still a lot of industries operating there that are operating at a profit. Yes, they're creating a glut because it's just so cheap to do business there. But, I don't see where the end is yet. But I think it's going to be when the system flips.
I want to challenge you on one thing. You mentioned, you said businesses aren't in the business of going out of business, and you have to at some point make a profit. I guess there's two parts of that. One is, how long is your long game? How deep are your pockets? Because if you're really going to outlast drive all your competitors out of business, so that then you can utilize the monopolistic pricing power that you've created for yourself by buying incumbency and market share. That's one question: is how deep are your pockets and how long your lasting is. But the other assumption that's built into that, I want to challenge, just because I've been challenged on that multiple times. People say, no. You're using a Western way of thinking. You're using a European/American thought process about the purpose of business is profit. And they say the Chinese are solving for a different equation. They're solving for social stability. And with their overpopulation of males, they cannot afford to have people unemployed or they'll get social unrest. Therefore, they will continue without any foreseeable limit to incur any amount of debt necessary, which they're going to just provide for themselves, doesn't matter. And they're going to just keep building that oversupply in order to keep full employment, in order to get social stability. And just a predictable but unintended consequence of that, whether it's beneficial or not to them strategically, is the next question we should talk about, is this idea that you've got this unending oversupply, but that's not the primary objective. The primary objective is full employment, not profit. So the one question is, what is the end game of that? Can the Chinese or any country, and it applies to a lot of countries, just keep digging in debt further and further forever? Is there any natural law that will kick in to say that cannot continue forever? In the West, people have said, well, the banks will quit lending you money. It's like, really? So can you please address that question? Is there any actual thing, the dynamic that we can predict would actually be an end point for the Chinese, as an example, being able to just dig themselves further and further into debt forever, building more capacity in order to maintain full domestic employment?
Well, there's a lot of variables. You're talking about particular cultures. A lot of people have talked about how socialism is a successful model in Scandinavia. And a lot of that has to do with demographic issues and things like that. So you have the same sort of thing in China. You have it has to do with the type of people, the type of culture, how long you can do this, how long you can go into debt. I think the Chinese strategy is to use the debt to produce what they consider will be productive things going forward. I do think that they're concerned about social unrest, but I don't think they're very concerned about social unrest. I mean, the government has a pretty solid lockdown on that sort of thing. But for me, the big comparison and contrast is what the United States does with its debt versus what the Chinese do with their debt. So here in the United States, we're consuming the debt, which is still accumulating at about $1 trillion a year, although that's not what they'll tell you the deficit is. But if you do the numbers yourself, you can see that it's still growing at about $1 trillion a year. And by the way, we're going to have a big crisis here in March when they have to address this debt limit concept again, because they just, in an unprecedented way, just kind of suspended it until a certain date rather than setting a number. So Trump and the Congress are going to have to deal with this issue. But in the United States, if you analyze our budget, it now is getting to the point where we're over 50% just transfer payments. So we're taking our tax money from corporations and taxpayers and giving it to other people, which is corporations and taxpayers. There's virtually no productive capacity being built. We're just consuming. And, that is a recipe for disaster when you're talking about a reset coming, especially if you're talking about a revaluation of currencies worldwide. China's strategy is the exact opposite. It's to accumulate debt and build whatever infrastructure they project to be a valuable asset in the next system. So I think that their strategy is realistic in the sense of the situation they find themselves in. I don't think that we have a really good functioning world economy right now. It's beset with a series of strange bilateral, unilateral, back of the matchbook type of trade agreements between individual countries or blocks. It's crazy. It's hard to even keep track of. So we don't really have this freely functioning world trade going on. And I think they're thinking that at some point we will, and this is just the best strategy that they can pursue until the next system comes online. Now, if the next system comes online and it is a revaluing of the currencies and the United States is no longer able to accumulate debt, but will actually have to pay as well, we're going to see incredible social unrest in the country, because if you just look at the entitlements that we have and the larger and larger percentage of pie that they're consuming, there's going to have to be significant cuts to entitlements. And when that happens, that is going to create social unrest. So I think that China's strategy going forward may not be perfect, but is definitely a better, more well thought out strategy than ours.
Let's talk for a moment about those unpayable entitlements, especially in the U.S. and Europe, frankly, and Japan. Japan has this aging population that's ahead of everybody else in that regards. What do you see as what do you think is a realistic end game play out of this demographic winter that the entire G20 world has placed itself in over the past couple of decades, as there are fewer and fewer new generation taxpayers to fund the increasingly long-lived and expensive medical costs, et cetera, of the elderly population?
Well, I'm not even going to go into the medical systems because they're completely broken, and it's just a gigantic racket, and that would take another, day-long conversation just to expose how corrupt our medical and insurance system is in this country. But they've got to address getting people back to work. They're going to push back the retirement age, and there's really no easy solution. It's just going to have to be less to put it in a very unpopular Mitt Romney campaign sort of way. There's going to have to be a lot less takers and a lot more makers. And the question is, how do we get there? If you look at a lot of our jobs in this country, even though they're considered to be private sector jobs, ultimately the money flows come from government in some way. So if you look at your higher learning institutions, colleges, and then we've got medicine, and so much of our economy now it comes from government money. We've got to find a way to turn things around and become, this is the kind of thing that Trump is talking about, become a manufacturing country again. The question is, though, are tariffs the right answer for that? And I think the answer is no. I think we're getting a short-term benefit right now with the kind of saber rattling that's going on. But you have to remember that if a trade war actually breaks out, everybody loses. And so we're seeing some saber rattling coming out from the Trump administration. But I don't think that the Chinese, I don't think that Trump, I don't think the Japanese, I don't think anybody really wants a trade war, but really a way out of it. And to address the demographic issue, you think about we've had a lot of warnings about world population growth, and we have eugenicists and Planned Parenthood and all these crazy people talking about all these things we need to do to stop it, and even the crazy conspiracy theories about reducing the Earth's population down to 500 million. But if you look at what's happened in the West, what happens is when standard of living reaches a certain point, then the growth of the population is really reduced because, one, it's an economic drain to have a family rather than an economic benefit. In countries that are more third world, the retirement system is your children. The children can actually work, et cetera. In the West, children are an economic drain. So as countries become more prosperous, they see a reduction in the population. So the answer, I hate to say it because it's going to make a lot of people angry, but actually the answer for the United States is what the answer has always been, is increase immigration. Now, that I don't mean by that you want to take the worst of the worst, which is what a lot of countries have been doing, especially in Europe, but you definitely want to take the best of the best. I don't see any reason why you wouldn't want to increase as much immigration from China into this country as you possibly could. I think that reasonable immigration from Mexico as well, tremendously hardworking people. Immigration really is the answer to solve the demographic problem. But you have to fix the system first. Immigrants should not be allowed to come in and collect welfare. They shouldn't even be eligible for any benefits. They should have to come in and work and compete. And by and large, a lot of them do. So I know it's unpopular, but the best answer for that demographic time bomb is to increase immigration.
Are you saying it's the best answer because it's economically expedient to import low-cost workers rather than to have your own children? Or are you saying it's better because it's quicker than trying to reset or to guide, the demographics through people actually having their own children? You lost me on why that's necessarily better.
Well, you can't force people to have children. I mean, Japan is the best case example right now. I mean, what's going on there is absolutely insane. Young men and young women just aren't even getting together. Men are marrying their pillows. I mean, and relationships are with cartoons. So when you have a society like that, now Japan is on a rock, so I don't think a shrinking population is a bad thing for them, except for, the economic issue and the demographic time bomb. But since you can't force people to have children, and when people reach a certain level of prosperity, they just simply slow down the number of children that they have. And again, as I pointed out, because it's a cost, it's a very, very high cost in an advanced society, then increasing immigration is a great solution as long as you're bringing in productive people, hard workers, people who are willing to contribute. That's what America has always done. It's always been a benefit. And so I know it's tremendously unpopular, but that's how I view it.
Well, I still want to keep challenging that paradigm that it's better to import hard workers than to grow your own, because there's some real cultural attitudinal shifts about the people talk about the snowflake millennial generation that following the 60s and the 70s, everybody coddled their children. Everybody's a winner, and in the 80s and the 90s, and there's been so much of that we have lost work ethic, we have lost self-determination ethic, that kind of thing. But if you look at like our channel, Reluctant Preppers, Aware and Prepared, the idea is that people are wanting to take more responsibility for their own lives, wanting to teach that to their children. So is it inherently, is there anything, any cultural value that comes from saying, yeah, we're prosperous, and therefore the cultural norm now is this modern lifestyle, this dual income, no children, yuppie lifestyle where children are seen as like super expensive. It costs hundreds and hundreds of thousands of dollars to raise a child using the cultural norm. But why would we follow that cultural norm if people are aware that is a model that does not bring true lifelong happiness, productivity, and everything, rather than just the culture committing basically demographic suicide by just saying we're just not going to continue ourselves. We're just going to bring in some cheap outside workers, somebody else to work for us. What about reclaiming the value of work, the value of self-sufficiency, the value of raising a family, teaching your own children real life skills, and not having them be a huge financial burden because they are contributing to the family? I mean, isn't there a whole set of basically experimental and frankly dysfunctional assumptions that goes into that we're seeing the sickness of playing out in our society? And so the remedy to that is just take a drug of immigrants rather than actually heal yourself as a family?
No, I agree with you that, on an individual basis, people are doing that. They're a very small percentage of the population, but you have to look at the perverse incentives created by the system. If you want to reverse those, I'm 100% for those policies that reverse those sorts of things. And whether it's policies that punish people for working, policies that increase the cost of employing people, there's a lot of changes you could make, and I'm for making those, absolutely. But under the current system that we have, you're not going to be able to incentivize a large enough percentage of the population to work hard, to have families, because people just react to the situation that they're in. But I'm definitely for dismantling the types of policies that are in place in this country, in Europe, that discourage, hard work, growth of families. But a significant percentage of those incentives are just the benefits of living in a wealthy society. A lot of people are very hedonistic, and if you look at feminism in the West, it teaches young women that what they should do is concentrate on their careers and then get married later. But we know that women's best time to get married as far as having children is probably under 25, and as they approach 30, we're talking about risks of genetic problems and stuff like that.
Yeah.
So we have an encouragement in our society of women putting off having families. That's also a big contributor. And so, yes, we have to fight the cultural incentives or disincentives. We also have to fight the regulatory disincentives. But I definitely think that immigration of high-quality, competitive workers is a good thing in the long run.
Just for the benefit of our viewers, for those who are interested, just do a quick search for yourself of the correlations. You will not hear about on the corporate media about the correlations between, everybody's concerned about breast cancer, for example, right? And uterine cancer, ovarian cancer. And everybody wants to do a race for the cure, run around, buy anything with a pink ribbon on it, okay? But look at the correlations between delaying initial pregnancy, aborting your first pregnancy, and not breastfeeding your children at least 6 months, and between those and breast cancer, and see what you find out. It's quite eye-opening, and you're not going to hear about it on the mainstream media. Everybody's racing for the cure, but nobody wants to talk about what the design actually would be to prevent that. Can we turn our attention to ownership of U.S. assets by Japan and China? You mentioned Japan looking at investing in U.S. infrastructure development, we've seen for the past decade significant, whether it was Japan as well, in buying up real estate in Hawaii, buying up. Talking about buying up ports and dock operations in the U.S. We have Canadian railways. The biggest railways that used to run through the states that I've lived in were called things like Burlington Northern and the Soo Line. Now they're called Canadian Pacific. So can you talk to us a little bit about foreign buying up of U.S. assets, and how does that play out for a country? I'm thinking back to like the old days of Ireland, where England basically came in and said, "Now we own the land. You guys are just my farmers, just tenants working the land, and you owe us all the produce." So how does that play out for the freedom of a society when foreigners buy up all your assets?
Well, it's all dependent upon the political system in place. And that's, we say that with the miners, when people are talking about supplementing their precious metals portfolio with mining stocks. And one of the things that is always mentioned as a risk is the political risk. We've seen many situations where countries that have precious metals or base metals as a primary economic resource, threats or actual acts carried out where they're nationalized. And so when you're investing in a foreign country, whether it's real estate, infrastructure, businesses, et cetera, you always run that risk of a political backlash where there could be a popular uprising, a new administration put into place, and just simply a reneging on those obligations. You're totally at the mercy of that political jurisdiction. So you're dependent upon free trade agreements being honored and other things being honored. Now, I think that most of the money that we've seen that's coming to the West Coast in the United States, rather than being Japanese, is primarily Chinese money, especially in Canada, the Vancouver real estate market, and just a lot of places. But I think that's more a factor of people trying to get money out of China. The government of China is very, very strict about money leaving the country because they want that money to stay there and support their economy. They don't want people to escape with their money, but there have been various schemes, and of course it's in the interest of local governments, for example, in Western Canada, to allow for people to get their assets out of China, whether that's flipping real estate or whatever. So I see that as a bigger factor, the need to get their money out. And of course, if you look at the imbalance here, when you're talking about Japan and their pension fund, for example, at 1.2 trillion, you have to ask the reverse. Well, what do we invest our Social Security money in? Do we invest it in? I think the breakdown for the pension fund of Japan is 25% domestic bonds, 35% domestic stocks, and then foreign bonds and foreign stocks. Well, what do we invest ours in? Well, we don't, because it doesn't even exist. This lockbox, this Social Security fund, it's full of IOUs. We don't even have any money to invest. And now the Chinese have a lot of money to invest. So they're in a net positive situation. We're in a net negative situation. They probably view, some of those investments as just the risk of doing business. But overall, they're in a much, much better position than we are.
So that's kind of like what we were talking about before when you said it's kind of a gift when these cheap consumer goods show up on your doorstep, and why would you call the cops unless they're doing predatory practices? But isn't this like the uber predatory practice is we'll trade you washing machines for your country?
Well, again, as I said before, they're looking towards the next reset. It's not a long-term strategy to want to stay there forever. Normally, predatory pricing is for when you put them out of business, then you can raise your prices. But that clearly has already happened. Most of the manufacturing has gone out of business in the U.S. and most of the world, and yet we're still seeing this happening in China. So you have to ask why, and I think the answer is that they're looking towards the next system and they want to build whatever is going to put them in the best position for when that system comes into place.
Right. Maybe I didn't ask it clearly. What I meant was not about the predatory practices on a trade basis. What I'm talking about is the asset. So we send the paper money is just how you keep score. So we send all this paper money over to China, and they send us washing machines and other consumer goods, which depreciate and which perishable, and then they end up in the junk in the dump yard. But then they have all that cash, and they turn around and buy assets from us, like our real estate. So in hard assets, railroads and real estates and docks and skyscrapers and things like that. So in the end, if you back away and just don't look at the cash, but just look at the asset swap, haven't we been for decades swapping perishable goods that get thrown away for our very country itself?
Well, that's a really good point. Actually, though, we've done a much better job of playing them for fools than that so far. If you look at the petrodollar strategy that we've run with the Middle East, they've been trading all their oil for debt, essentially. I don't know. If you listen to FOFOA or people like that, they'll tell you there's been a covert gold flow going there. But I would argue that the gold has probably been held in Europe somewhere and easily stolen or confiscated. We saw a lot of gold disappear from Libya, allegedly from the Ukraine. So the strategy of making a whole bunch of profits by selling stuff to the U.S. and then turning around and investing that in U.S. debt or U.S. stocks, that's been the ongoing strategy. Now, I think they're starting to back away from that. Definitely China's backing away from that. Japan's backing away from that. Perhaps Saudi Arabia and the rest of OPEC are backing away from that. And that creates instability in the current system. And this is the system that I'm talking about that's going to come to an end, where these countries produce valuable goods and services, sell them to the U.S., and they get something that they can only buy more debt with. And so, yes, it's a better strategy to buy something real, something of value, such as real estate or businesses or something like that. But again, you're subject to the political risk. There's always the political risk of the country you're buying those assets in, turning around and having a regime change and reneging on those obligations. So it's very risky no matter what.
Just following up on one more point you made a few minutes ago about the difficulty of, or one of the motivators for foreign purchasing, especially from China, of North American assets, you mentioned Western Canada, et cetera, is the ability for people to repatriate their foreign profits. And that's a real vicious cycle we've seen play out over the last several decades of U.S. companies lured by the promise of low tax or low environmental regulations or low wages, being able to move their operations, manufacturing, et cetera, overseas to increase their short-term profits. But then you end up with this two-edged sword. If all of a sudden you've got all these foreign profits that were sitting there overseas and you can't bring that money back home without paying huge repatriation corporate taxes. So do you believe that Trump's promise to reduce or suspend U.S. taxes on repatriation of foreign profits will, in fact, be a game changer in being able for North American businesses to bring, or U.S. businesses, to bring their foreign profits back home and reinvest here domestically?
It may work. I don't know that that's the only factor, and I think that corporate tax rates would have to be slashed significantly, and it might not even happen. I mean, you see situations where many cities or municipalities have had corporations get all kinds of significant tax breaks to come in and build manufacturing, only to turn around and move it out. They've had, lawsuits to make them stay and things like that. So it's questionable as to what the reaction will be. It may be that these corporations decide that, the U.S. isn't going to be a profitable market going forward, period. We're going to concentrate on Southeast Asia, Myanmar, India, growing parts of Africa, and we're going to keep these profits offshore regardless.
Well, Brother John F., I really appreciate you having explored a look ahead at 2017 with us and some of these major factors. You mentioned just at the last thing, and as I wrap up, the last question is about what these assets get, what these funds get invested in. And you did mention China staging itself to be in the right position for emerging from after an economic and currency collapse. And you mentioned amassing precious metals as part of that. Could you just hit us as our final topic of where you see precious metal supply and demand, specifically from the demand, and who you believe is amassing physical precious metals, and what does that imply for the prudent individual and family?
Well, I don't think there's any doubt that the precious metals are being amassed in China, as well as a large amount of the base metals and all other sorts of commodities. I think it's a bet on their part where they don't know what's coming for the next system, but it's a very prudent bet. If you think about that, if the next system is a gold-backed yuan, obviously that's a brilliant move. But then again, if it's an SDR basket, what type of analysis is the IMF or World Bank or whoever's in charge of it? How are they going to determine what the value of the relative currencies are? And I would have to say that a big way of doing that would be, what are the gold reserves in that country? And so that's kind of a win-win for China to continue to accumulate. There's no point in even looking at how much gold is mined in China because they never export it. They only import. So there's no question that China is the elephant in the room. I think they've been taking off even a larger amount from the European stockpiles than we know. I don't think the U.S. probably even has any left. And certainly we are afraid to give Germany back theirs. And there's been a lot of indications that a lot of that gold has already been melted down, converted into kilo form, and has been socked away in China. So if that's the case, like Jimmy Rogers said, China is the next economic power for the next century. And if you want to get rich, you want to follow them and do what they're doing. And definitely that would be stockpiling gold.
That was a quote also I recall from the Oracle of Omaha that he said that the 19th century belonged to the British, the 20th century belonged to the United States, and the 21st century belongs to China. Invest accordingly. So
yes, true.
Well, Brother John F., thank you so much again for joining us here on Reluctant Preppers. If you could just send us off with a word on how people could follow more of your work, because you are a prolific producer of content and analysis and observation.
Sure. We have a member site. It's brotherjohnf.biz, B-I-Z, and you can sign up for a monthly or a yearly fee. I release a video every 3 or 4 days, a member video, and then we have discussions and investment strategies that we talk about.
Well, John, from BrotherJohnF.com, thank you again for joining us here on Reluctant Preppers. We are so glad that you came.
All right. Thanks a lot, Duncan.